It is so vital that you effectively budget. If you don't, you could find yourself in a deficit or with cash flow difficulties. In this video, we're going to look at budgets in more depth, and also we're going to look at some of the remedial action that can be put in place should you find yourself with a lack of cash. Thanks for leaving a like, and make sure you subscribe for future related videos. Within this video, we're going to cover budgets. We're going to look at budgeting tips, what types of expenditure and income we can hope to earn. We're also going to look at cash flow forecasts and also how to deal with budget surpluses or budget deficits. So what is a budget? A budget is an agreed financial plan which estimates income and expenditure for a set period of time. Budgets are used by individuals, businesses, and indeed governments. So what budgeting tips have we got? Well, individuals must prioritise their expenditure. A nice little flow diagram is on the screen. Firstly, pay all mandatory bills. These are bills, which we'll come on to later, that have to be paid. Then we want to meet our basic needs, our basic physiological needs. We want to then pay essential bills. And then finally, divide any surplus between spending and saving, surplus being the amount left over. So what's the difference between mandatory, essential and discretionary expenditure? Well, mandatory is items of expenditure that we have to pay. These are things like council tax if we live in a house in the UK, for example. Essential expenditure, on the other hand, is those things we have to spend money on to provide a basic standard of living for ourselves: food, water, shelter. And finally, discretionary spending. These are the types of expenditure that we have a choice whether to spend on or not. For example, do we go out for a meal to a restaurant? Do we go for a massage? Do we go on holiday? These are all items that we have a choice of whether to spend on or not. The second thing we're going to look at here is earned versus unearned income. Now, earned income is these types of income generated from working. This is our salary, our wages, any bonuses that we've earned, or if we're self-employed, our income from that. On the flip side, unearned income is income that we gain which is generated from other sources. Now, there's a number of different sources of unearned income. It might be benefits which are paid from the government, which may be paid weekly, once every few weeks, or monthly. State and private pensions, of course, these are when we retire, and they're usually paid monthly. Interest on savings accounts, which may be paid monthly or more usually once a year. This is money we earn based upon what interest we get from our savings. Now, returns on investments, such as dividends, are paid to shareholders maybe once or twice a year if the company performs well. Of course, there's many other investments that we may choose to make. I've made a separate video on this, and I'll leave the link in the description. We may also get allowances paid by our family members, which may be paid weekly, monthly, or on an ad hoc basis. We may also receive financial gifts that may be received on birthdays or at Christmas or other celebration days. We may get one-off payments known as windfalls from things like inheritances or a win on the premium bonds or lottery. And we also may get loans. These are incomings that must be repaid with interest and charges, but nevertheless they contribute to our unearned income. So what is a cash flow forecast? Well, a cash flow forecast is a plan of expected incomings and outgoings over an extended period, e.g., it might be the next 3 to 6 months, for example. The cash position at the end of one month becomes the starting balance of the following month. Now, why is it vital that we do a cash flow forecast? Well, of course, we need cash, coins, notes, money in our balance, of course, to be able to pay for expenditure. We need to pay, as we said earlier, for essential spending. We need to pay for mandatory spending. We may also wish to spend on discretionary spending. So what are the benefits of creating these things called cash flow forecasts? Well, if we predict 3 to 6 months in the future, we can predict our cash inflows. We can also predict our cash outflows. This means that we're able to plan for when income will be irregular. Of course, if income is irregular, we can put things in place to plan for that, and we'll come on to how to deal with deficits later in the video. We're also able to plan for when unusually large payments will have to be made. Of course, people often have to plan for car insurance payments, for example. They can be used to identify deficits, and we can put remedial action into place. For example, we may wish to arrange an overdraft with our financial services provider. They're used to identify surpluses, which is when we've got a lot of cash and we can decide what to do with excess cash that we hold. For example, we may wish to invest it. And we can also do later comparisons. We can compare what we actually planned to spend, what we actually spent versus what we plan to spend. If there's any large discrepancy, we can put measures into place to avoid that discrepancy in the future. So, how do we deal with a budget surplus or a budget deficit? A surplus is where we've got excess cash, or a deficit is where we do not have enough. There's three major things we can do. The first thing is we can look to increase our income. That could be potentially for taking on a second job or looking for investments that generate a greater amount of income. Of course, investments that generate a greater amount of income are likely to be more of a risk, so therefore are not guaranteed. We can also look to decrease our expenses. In order to do that, we may choose to spend less money on discretionary items. Of course, we still need to pay our mandatory and our essential expenditure. A third thing we may wish to do, if we've got a deficit, is that we may wish to put remedial action in place. We may wish to get an overdraft, for example. These are fairly easy to arrange as long as we have a standard or better current account with our financial services provider. In fact, financial services providers are often very willing to offer overdrafts because they see the potential to make money from us. Of course, if we've got a surplus, on the other hand, it's not the worst problem to have, but a surplus means we've got excess cash just maybe sitting there. It could be in coins and notes, or more likely as a balance in our current account. Now, what can we do with excess cash just sitting there? Well, we can look to invest it. By investing it, we are giving ourselves the opportunity of it to grow at least or better compared to the rate of inflation. If it was just left in our savings account, the likely rate we would get on savings may be less than the rate of inflation, so still the value of our money is being eroded over time. So, 3 multiple choice questions to check your understanding of this topic. In a cash flow forecast, which of the following would be an example of mandatory expenditure? Would it be A. Council tax, B. Food and drink, C. Gas and electricity, or D. Rent? The answer to question 1 is A. Council tax has to be paid, or there are consequences for the individual. Question number 2. Campbell is going on holiday in 9 months and still needs to make the final payment of £2,000. Which of the following will help him to achieve his goal without borrowing money? Is it A. Account balances, B. Authorised overdraft, C. Cash ISA, or D. Cash flow forecast? The answer to question 2 is D. A cash flow forecast will combine his budgets to see if he can make this large payment. And question 3. Which of the following is an example of unearned income? Is it an annual bonus, inheritance, overtime, or self-employed profits? The answer to question number 3 is B. This is awarded to the individual rather than being earned. That is an inheritance. Make sure you subscribe to this channel for financial studies videos. I'll be doing full evaluations of both case studies when they're released.